Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Well, folks, let's start by talking about the price of Bitcoin. I know there's nothing going on here, but I want to share some data showing what smart money, what whales are doing. Right now, Bitcoin's sitting at $59,000. We're still in the boring zone. We're still chopping sideways. It's boring as hell, I know. But let's put our feelings and our emotions aside and let's look at data. So whales are hoarding Bitcoin. Wallets with 100 plus Bitcoin hit a 17-month high. This is very interesting, folks, and it's the same story every cycle. When retail gets bored, when retail gets fearful, smart money and whales are buying up. They're positioning themselves and they're buying the lows because they know there's still room to go here in this bull market. There's still the fifth wave, if you want to call it that, in the chart analysis, right, folks? So data shared by blockchain analytics platform Sentiment in an August 31st expose shows over 283 wallets managed to cross the 100 Bitcoin mark in August. Now, Sentiment is a partner of the podcast. If you want to learn more, you can check out the link in the description. And this data shows us that there's an increase, folks. The data doesn't lie. These whales are buying up. So as crypto prices have let retail traders down, Bitcoin whales are growing in number. A net gain of plus 283 wallets holding at least 100 Bitcoin has emerged in just 1 month, Sentiment said. The now 16,120 such wallets on the network has broken a 17-month high. In the same period, Sentiment reported that the wallets with at least 10 Bitcoin, known as sharks, have also been increasing their holdings. Overall, the blockchain analytics platform estimates all these wallets, which range between 10 and 10,000 Bitcoin, have collectively accumulated over 133,000 coins worth more than $7.6 billion in the last 30 days. Folks, I hope you are on the side of smart money, and that is you are buying the lows, buying the pullbacks, dollar cost averaging in. That's not financial advice. You should do your own research. But the point is the principle. We buy low and we sell high. We buy the fear. We buy the blood on the streets. When people are scared, when the masses are scared, we have the contrarian mindset to know we don't follow the herd, but we follow the strategy of smart money, and that is accumulating. Now, personally, in full transparency, I have been buying some Bitcoin, some Ethereum, and Solana because all this consolidation and then with the Fed cutting rates and much more, I think there's going to be a significant move coming in Q4 of this year into 2025. And I'm ready to take profits. I'm going to squeeze as much juice out of this orange as possible, guys, and walk away with as much profits. And as I've stated many times, my strategy is to take some of that money, wipe out debt, spend some of it, of course, right? Have the lifestyle chips and reinvest some of those profits in crypto, real estate, and other assets. That's my strategy. I'm not saying you have to do that, but I'm just being transparent with you guys. I've been here for multiple bull and bear market cycles. I've learned how to make money. I don't reveal my exact portfolio value, but it's more money than I've ever seen in my life. I'll put it that way. And also part of my strategy, as I've said before, is I'm going to be buying the bloody bear market bottom come late 2026 into 2027, buying up the fear when people are scared again, just like they were in 2022, just like they were in 2018, buying those lows and growing my portfolio and waiting for the next Bitcoin halving in 2028 and then the bull market cycle top of about 2030. So I hope you understand my view on the markets. It's macro. I don't know how to leverage trade and I don't want to, but I've seen too many liquidations, too many people getting hurt, but I'm playing the long game and that has worked out well for me. It helps me to sleep at night. Even I know hodling has its own volatility and risk, but it's less risky than using leverage, right? So I don't use leverage. Now, I've often stated I do swing trade, meaning I'll buy the lows, like say Bitcoin is at 59K. I'll have a separate segment of my portfolio. Aside from my long-term hold, I'll buy, let's say Bitcoin, right? Or Solana or whatever it is. And let's say it rips over the next month or 2 months, I sell that rip and then I take those profits and compound it. That is my strategy. I hope you guys understand. So Once again, the data doesn't lie. Smart money is making moves. And guys, it's no surprise because we've seen the ETF buying and the amount of inflows that has been record breaking. Bitcoin is the best performing ETF in the history of ETFs, the fastest growing as well. Nate Geraci of the ETF store highlighted this today. He says 13 of the top 25 ETF launches this year are either Bitcoin or Ethereum related. Out of approximately 400 new ETFs, top 4 ETFs all spot Bitcoin ETF. What does that tell you? There is incredible demand, and we are still in the first innings of this thing. The ETFs were just launched months ago, folks. It hasn't been a year or 2 years. It hasn't even been a year yet. Just think about that. And we're breaking these records. And it's because I go back to what Paul Tudor Jones said in 2020. It really clicked for me. He said Bitcoin and crypto is the fastest horse in the race because you could invest in real estate, you could invest in the NASDAQ and stocks and so forth, but nothing moves like crypto. And when you think about what you're going up against with inflation and debasement of currency, you need the fastest horse in the race to outpace those things, right? So nothing wrong with real estate, nothing wrong with gold and so forth, but nothing moves like crypto. And Bitcoin has been the best performing asset over the past 12 to 14 years. It's incredible. So we are here early, relatively early to, other asset classes, and it's an opportunity of a lifetime. And I'm looking, like I said, to squeeze as much juice out of this orange. Now, I want to share something here from analyst Titan of Crypto. He highlighted on the Bitcoin chart, the weekly chart, that the golden cross is happening. He says a golden cross between the 100 moving average and the 200 moving average is unfolding, something we've never seen before. This could trigger the most explosive bull run yet. I think we are seeing multiple metrics and signals that are setting up the platform, guys, for this thing to melt faces. I know right now that seems like it's not going to happen. I know it seems really far off, right? Like as though the ship has already sailed. But folks, I've been here multiple times and I've seen this, and I watch the comments and I'm like, well, I guess everybody has to learn in their own time. Experience is a great teacher. And look, it wasn't until experience came along that I learned. And look, I could be wrong. Obviously, I don't have a crystal ball, but I'm at least not using my feelings and emotions, and I'm using different analytics, metrics, and data and forming my thesis. So I want you guys to understand where I'm coming from. Am I bored? Hell yeah, I'm bored. Do I want the prices to go up? Of course. Guys, I wish Bitcoin could pump to $200,000 tomorrow and I'll be taking profits out the table. But part of investing is, patience. And here, the first response to this chart that this analyst put out there, the first comment is, "I'm tired, boss." Folks, it's the same market psychology playing out over and over again. Look at this comment versus the data showing whales buying, right? And look at the ETF data as well. You see the juxtaposition, right? The contrast between these things. This is why you have to get to that mental place. I am not investing with my emotions, and I'm ready to be patient. If I want to make life-changing money and make incredible returns, I have to be patient, because this is not going to the casino, folks. This is not playing the lottery. That's not what we're doing here. So I hope you understand that. All right, quick word from our sponsor. A great place that you can buy Bitcoin and altcoins is on Uphold. This is a platform I've used since 2018. They have 260 plus cryptocurrencies. You can also trade precious metals on this platform. Guys, they are fully reserved. They have transparency reports. You can go review that. They don't commingle or lend out your funds, and they have a lot of cool features. So if you'd like to learn more about Uphold, check out the links in the description. Okay, folks, we got big news coming out of the SEC regarding FTX. Now, before I even get to the details of what the SEC is trying to do here, remember that scumbag regulator Gary Gensler and the SEC have not handed over FTX communications. Remember, Patrick McHenry threatened to subpoena Gary Gensler. This was in a congressional hearing because Gary has a lot to hide. He was meeting with Sam Bankman-Fried, they were meeting with FTX, and they were going to give FTX what they gave Prometheum, the special broker-dealer license. So there's a lot of history here and a lot of context, obviously. And here's the headline. SEC warns FTX against paying creditors back in stablecoins and other crypto. Why? What are you so worried about, Gary? Let me give you the details. Throughout the FTX bankruptcy, many different avenues have been explored or proposed to maximize creditor recovery from relaunching the FTX exchange in order to make money back for creditors and distributing claims as tokens in a new venture that can be traded. Some decentralized marketplaces such as Found.xyz and Figure Markets even launched support for tokenized FTX claims trading this summer in a move that one crypto CEO called one of the most crypto things he's seen. However, FTX, led by CEO John Ray III and legal counsel Sullivan and Cromwell, shot down the idea of restarting the exchange. Thank goodness, right, that they didn't restart this nonsense, claiming no investors who put capital needed to spin the offshore exchange back up again. Who the hell would want to move money back to FTX? I would not do that at all. Even if you paid me, I would not do it because the brand is tarnished. We don't know what lingering connections there are to the employees at FTX and what could happen. Anyway, now in a recent filing, the SEC Commission has warned FTX that it reserves the right to challenge the legality of paying back claims or otherwise trying to make money from its stash of crypto asset securities. Now, that term is from Gary Gensler. That is nowhere in the SEC handbook or legal framework. That is a bullshit term Gary made up, and he told the folks at Prometheum to repeat it. If you recall, I had Aaron Kaplan of Prometheum on the podcast. He was echoing those statements nonstop. And I even asked them, why are you calling it crypto asset securities and yada, yada. So the SEC's filing also notes that the plan fails to specify who would distribute these stablecoins should that provision be approved. The SEC didn't outright state that such an action would be illegal, writing the SEC is not opining as to the legality. Oh, really, Gary? You're not saying this is a legal issue. You're just saying this is your opinion. This is what you want to happen. Get the hell out of here. Under the federal securities laws of the transactions outlined in the plan, but notes that the agency reserves its rights to challenge transactions involving crypto assets. So outright unfair attack, right? There's no legal reason for them to say this or do this. It is just Gary doing the bidding of Elizabeth Warren, who's doing the bidding of TradFi incumbents. And $16 billion will be returned to the creditors starting in Q4 of this year. And here, Paul Grewal weighed in on the SEC's note. He says, why provide clarity to the market when threats and aspersions will do? Investors, consumers, and markets deserve better, way better. James Murphy, Meta Lawman, weighed in and said the SEC tried this same exact hide the ball tactic in the Voyager bankruptcy, and the judge there appropriately rejected the ploy. Here's what the Voyager judge had said. I cannot simply put the entire case into an indeterminate and expensive deep freeze while regulators figure out whether they do or do not think there is a problem with the transactions that are being proposed in the plan of distribution. If there is a problem, I expect a regulator to tell me that it has an actual objection, as opposed to saying that there might be an issue. But this, as I've said, is scumbag activity from a scumbag regulator. So even the judges are like, what the fuck? What do you want? What are you doing here, right? Either say there's some illegal issue here or just shut the hell up. Like, what are you trying to do? But we know the game. Gary's trying to stop and roadblock crypto as much as possible. And also tell me what the issue is and why it is an issue so that other parties may address it and so that I may make a proper and well-considered ruling. James says the SEC learned nothing from the judicial slapdown in Voyager and just throws the same grenade into the FTX bankruptcy. Hard to see how this action furthers the SEC's mission to protect investors. But that's the thing. It's not about protecting investors. It's I'm a puppet on strings being controlled by TradFi, banking incumbents who are getting disrupted by stablecoins and crypto, where capital is leaving their investment products, right, where they can't touch this asset class yet. For example, they can't custody it. The only thing they have now is ETFs. And the capital is going into the tokens directly, and people don't need to go to Goldman Sachs anymore. They don't need to go to any of these investment advisors. They can buy the asset themselves. So you think that old guard is just going to lay down and not do anything? No, they're going to fight, folks. And they've weaponized. They made the call. Hey, Gary, we got a job for you to do, right? Hey, Elizabeth Warren, we got a job for you to do. If you think that's a conspiracy theory, if you think that's far-fetched or outlandish, you don't understand how the world works. You got a lot to learn. Now, Stuart Alderati also weighed in about that crypto asset security. He's Ripple's chief legal officer. He says the term crypto asset security is nowhere to be found in any statute. It's a fabricated term with no legal basis. The SEC needs to stop trying to deceive judges by using it. So people wonder, why do you call Gary a scumbag? Here is exhibit number 100 of why I call Gary a scumbag. Oh man. But guys, from the macro, the big picture, crypto will win. Disruptive technology always wins. Remember what I've been telling you guys. First, they ignore you, then they laugh at you, then they fight you, then you win. We are certainly transitioning from the then they fight you to then you win phase. We're winning in courts. We're winning in a court of public opinion. We're winning with adoption, where crypto is a political force. Political candidates are endorsing crypto now. So Gary and Elizabeth Warren are on the losing side of history. All right, final news item here. OKX Crypto Exchange. I used to work for them, by the way. They are now fully licensed in Singapore. They have hired a former MAS official as a local CEO. So that's pretty big. And that's the monetary authority of Singapore. So big hire in addition to getting the license. So all of these exchanges and companies are expanding globally. Everybody's trying to get a bigger share of the pie here, get as much market share as possible. So really great to see. And we need competition in many markets. Competition's healthy and it's really beneficial to the consumer. It helps these exchanges to compete and to make sure their service is top level, because if it's not, you're going to lose market share. You're going to go out of business, right? Especially if you're in a race with other companies. And we are seeing on and off ramps being built globally, and that's important for the adoption of crypto. So exciting news here. And I know it may seem simple, but it's important in this still nascent asset class, but we're growing and we're going to win, guys. The genie's out of the bottle. There's no putting it back in. This train has left the station, and Gary Gensler is running behind it. All right, folks, don't forget to sign up for my free email newsletter on Substack. It's 100% free. Link will be in the description. Also, be sure to grab my book, Rethinking Crypto, on Amazon. It's available in paperback and digital. Grab a copy to support the podcast. Buy a few copies for your friends and family. It makes a great gift if they want to learn about crypto. It includes advice for investing in crypto and so forth, what they need to watch out for. And if you bought a copy already, guys, please, please, please leave a rating and review. It will really help out my rankings. Thank you so much. I appreciate you all, and I'll talk to you all later.